Hi everyone, welcome to Ashton Gray Investments. This is Pratik Ahuja. I am the Director of Investments and Partnerships at Ashton Gray Investments. In this video, I'll take you through the introduction of our company, the track record of Ashton Gray developers, and why a portion of your portfolio should definitely be invested in dollar-bound assets. We are a real estate developer based out of Houston, Texas in US, and we have our Indian offices in Mumbai and Coimbatore. We build grade A real estate assets across diverse categories such as luxury spec homes, multifamily, senior living, master plan development and mixed use developments. We have a current development portfolio of about 4,000 crores across 20 plus projects that we have delivered in US across last 12 years. We have a current investor base of 500 plus investors who have shown their faith across different investments in US. As a general modus operandi, we raise about 70-75% of our capital through banks and financial institutions in US because the cost of capital in US is about 3.5-4.5% and remaining 25 to 30% through our set of private equity investors. The difference with AGI as compared to other real estate developers is that we are raising a small portion of this 25-30% through a set of Indian investors. So it basically gives you a unique opportunity as an Indian investor to invest in one of the biggest real estate markets globally. The kind of business model we have for Indian investors basically lets you earn a passive income on a monthly or a quarterly basis and a certain equity premium or profit sharing at the time of exit. We are basically looking at 18 to 20% annualized returns, out of which about 10 to 12% is fixed payout paid out to you on a monthly or a quarterly basis, and remaining 8 to 10% is something that you realize at the time of exit, which is generally across a period of 12 to 36 months. The reason why we are bringing investments with a shorter time frame in India is because we would want the investors to experience a full product life cycle from entry to exit. Now, the reason why the real estate developers in India have not been able to replicate this model in India and generate the similar higher returns in Indian market is because first, the cost of capital. So the cost of capital in India is about 12 to 15% for real estate developers, which is a huge difference of 10-12% from US markets, which basically kills the profitability of the investors. The second reason is all these private equity investments and fractional investments in US are regulated by Securities and Exchange Commission. Just like we have SEBI in India, we have Securities and Exchange Commission in US. That is the reason why these investments have been highly successful in developed markets like US. The third reason is huge supply of ready to move in properties in India. Combine that with higher interest rates, investors are not able to generate wealth in real estate investments. Till the time interest rates do not come down, supply doesn't get absorbed, we are looking at below par returns for real estate investors in India. In the past couple of years, we have seen fractional investments picking up steam in India, but the risk to reward ratio is just not favorable for the investors as of now. Now I'll talk about how we structure our investments. So for every new investment opportunity, we create an Indian LLP. All the investors pooling in their investments become a partner in that LLP. Ashton Gray Investments manages the Indian SPV and the money flows from Indian SPV to US based LLC, which is basically the project development entity. So the money basically flows from Indian investor to Indian LLP and from Indian LLP to US LLC and vice versa. It's a simple and tax-free structure that we have been advised upon by our legal advisors